Joining me now, Andres Garcia Amaya is CEO of Zoe Financial, and Diana Amoa is Senior Portfolio Manager at JP Morgan Asset Management. Andres, why do you think this timing is coming today? Is it just that kind of cleared the way for everybody to refocus on the progress that seems to be happening on the COVID front?
Yeah, I think the underperforming jobs numbers kind of reminded us that the market looks at bad numbers as good news and good numbers as good news right now, right? And what I mean by that is bad news basically means that there's probably going to be more fiscal support, more monetary support. And good news is great. Things actually are going to be potentially a V-shaped recovery, and there's no way monetary policy is going to change anytime soon.
Fair enough. Diana, where does that leave you as an investor then? Does it say, we have to wait and see what happens out of Congress, or do you feel like you can move forward regardless?
I think markets can move forward regardless, and investors can actually move forward regardless because of a few things. So the data today was disappointing, but not necessarily, as Michelle was pointing out, not necessarily bad enough to force the Fed's hand. So we don't expect the Fed to change their weighted average maturity of their balance sheet in December. But what it does underlie the fact that we do need a fiscal deal from Congress, and the statements we've heard since the data actually do point to the fact that we're likely to get that out. We do expect to see a bit of softness in the Northern Hemisphere because of the shutdowns, but the rest of the world, momentum on growth looks pretty strong. So we think next year, as the vaccine gets rolled out, we're likely to see a strong recovery across most economies. And for investors, you need to take the medium-term view. So while the data today was disappointing, I think the outlook for the global economy into next year is actually a pretty promising one.
Yeah. Andres, how important is it for you if the 10-year breaks above 1%, and what happens when it does?
I think that it could signal two different things. One is that reflationary trade, if you will, with the idea that fiscal policy is coming. That means more inflation. And potentially, you've got to remember, the yield not only signals inflation, but growth, right? So I think it could be a combination of kind of the signal of the market expecting more inflation and more growth. But then one thing that we haven't talked about that is important to keep in mind, especially for the stock market, is that the markets care about earnings. And we're 95% of the way done with third quarter earnings. 81% of companies beat earnings. Usually the average is around 71%. So when you look at all-time highs, throughout everything that we've seen on the economic side, which hasn't been as strong as we just saw with the job numbers, earnings do basically what they have done the last couple of years, which is deliver.
And Diana, same question for you. I mean, how important would rising rates, 1% yield be? I know as well, though, that you guys are really focused on some investments outside of the U.S. So perhaps in that sense, watching the dollar is more important here.
Totally. So 1% yield from a U.S. perspective is probably a level where you will see certain groups of investors start to look at getting back into the treasury market or increasing allocations, just given how steep the curve is. So when you think about Japanese investors, where they've lived in a world of negative rates for a long time, actually, if you can get 1% with hedging costs as low as they are, it's still much higher risk-free rates than what they have back home. As far as the outlook for the dollar, we do expect modest weakening into 2021, which will be supportive for investments beyond the U.S. So if you look at pockets of emerging markets, we expect China growth to be at 8%, and that's going to have a positive impact on the rest of the EM space. And yields are much higher than they are in developed markets. We do expect to see financial flows actually moving towards emerging market economies.
Shepard Smith here. Thanks for watching CNBC on YouTube.